Welcome guys to Professor's Opinion. And on this video, I want to talk about the three types of stock markets around the world, the variation between them, and how you can make your current trading and investment decisions based on these variations. And I'll try to keep it simple because obviously it is not simple, but I'll try to simplify it as much as possible. So the first thing is there are three types of stock markets. So you have the developed stock markets, the Western world, most of the Western world, right? USA, UK, Europe. And then you have the emerging markets. So these are the middle income countries. So this could be India, Saudi Arabia, China. These are countries that are that haven't fully developed, but they're not at the bottom either. So they're like the middle income countries. So these are what we call emerging stock markets. And I know the last few years, especially from USA, CNBC, and all that, you guys have been hearing how emerging stock markets will do well. There will be a big rally in emerging stock markets in the next few years. And the rally was supposed to start last year, this year. Even Michael Blurry, the guy from Big Short, he also talked about betting on the emerging markets. Now, here's the problem. That was a good bet before Trump attacked Iran. So by attacking Iran, the entire equation has changed. And I'll tell you why. So you have the developed stock markets, you have the emerging markets, stock markets, which are the middle income countries, China, Russia, India, Saudi Arabia, UAE, Qatar. And then at the bottom, you have what we call the frontier markets, right? So these are the least developed stock markets, least developed economies, Bangladesh, Sri Lanka, Pakistan, a lot of Southeast Asian countries, a lot of countries in Africa. And so obviously it's obvious from what I've said so far that developed economy stock markets are the most expensive because they're the most stable and reliable. And frontier stock markets are the cheapest because they're less stable. So, according to a lot of analysts on Wall Street, within the last 2 years, they've talked about how money is moving out of developed stock markets because of stagflation, not enough growth, and too much overpricing. And those money is now moving. Oh well, it has moved to emerging stock markets. India stock markets saw a huge rally last year, and that was driven by this narrative that emerging stock markets will rally. UAE saw stock market saw a huge rally, Saudi, Qatar, China, right? So these stock markets have been witnessing a strong rally in the last uh 1 to 3 years. But this year, after Trump attacked Iran, the entire equation has shifted. And because the balance of stability, the relative stability between emerging economies and frontier economies has shifted. Okay. So India is no longer more stable politically, economically than Pakistan and Bangladesh, right? Their currency is devaluating. If you guys have been following the news recently, the rupee has been devaluating significantly, hitting all-time low against the US dollar. And it's because the government is spending too much. And the reason the government is spending too much is because the growth engine is slowing down. And the reason the growth engine is slowing down is because investment, FDI, is moving out of the country. And the reason FDI is moving out of the country is because the big investors do not forecast political and price and economic stability in India in the next few years. And there are multiple reasons they're fighting war in multiple fronts against Pakistan in the west, China in the north, Bangladesh in the east. There, the seven sister states wants to separate, and they're also picking fights with big Western partners. I mean, they've signed a free trade deal with European Union, but European Union is not as effective partner as people think they are because it's a bureaucratic regime. Okay. So they're picking fights with USA. I mean, yeah, Russia is a reliable partner of India, but that's only because Russia sells most of its energy to Indian refineries, right? And that's only because Russia doesn't have any other option. So the moment Trump removes sanctions from Russia, Russia does not care about India anymore because now they can sell their energy to at a much higher price to refineries in the Western world. So this is a very short-term friendship, in my opinion, between Russia and India. Same with Russia and China. It's a very short-term relationship. And yeah, it's not gonna last, in my opinion, because the cultures are so vastly different. Okay. People who have been to Russia and China and India knows that these cultures will never intermingle in an efficient and smooth manner because they're so different. Russia is more closer in culture-wise to Europe and Western world. Maybe they're conservative, but in terms of their regular day-to-day culture and the way their people look, appear, and think, it's closer to the Western world, right? So money is now moving out of the emerging economies. And one of the big reasons is because of the war on Iran. Because Iran has realized that, yeah, we can't attack Europe and USA because be, that's too much of a risk. But what we can attack are the emerging economies in Middle East, right? That's not a risk. These emerging economies, they just have a security umbrella of USA. They don't have an actual strong military of their own. So Iran has realized that we can just attack these Middle Eastern emerging economies and the stock market will crash. And that's exactly what's happening. The Dubai stock market crashed the last few weeks, if you guys have since it opened. And so what does that mean? It means money, foreign money, is moving out of these emerging economies. So this money has to go somewhere. Okay. So where can it go? So this money that's moving out of the emerging stock markets, they can either go to high interest debt, bond, or they can go to frontier markets. Now people say, oh, why can't they just funnel their money back to Wall Street or the developed stock markets in the Europe and UK? Like I said, it's overpriced. Okay. The multiples, the average PE ratio of stocks in Europe and UK and North America is like far significantly higher. And it's not like justified by the fundamentals in any way. It's a Ponzi scheme based on AI. True. And the investors know it. The big investors know that. Like this is a Ponzi scheme that's towards the end of its life cycle. And so investing in the developed stock markets right now is a huge risk. So what else option do they have? Emerging economies? No, because of the war, and they're not uh, turning out to be as stable than the frontier markets as people thought they would be. So where else can the money go? Well, it can go to high interest rate bonds, corporate bonds, government bonds. But again, the debt, the level of debt currently around the world is so high that buying bonds is not as risk-free as people think it is, right? So the ratio has changed. So people used to like measure Sharpe ratio by your return divided by the return you would get on a 10-year treasury yield. But that ratio no longer exists, right? So now you have a situation where the best option to put your money is the frontier market. Where else do you keep it, right? Because emerging markets are no longer the bullish case as they were in as analysts were telling they would be. So developed economies way overpriced, way too much downside. The bond market, again, it's not there is downside to the bond market. Yeah. Contrary to popular belief, there is a significant downside to the bond market just because of how fast major currencies are devaluating right now. So what else option do you have? You gotta put the money somewhere. That's where the frontier markets come in because you have the like markets like Pakistan, Sri Lanka, like for example Bangladesh, the Dhaka Stock Exchange. Yes, there are more political stability now in these markets, right? The governments have shifted, have transitioned, and there's stability right now, political stability in these frontier markets. In terms of economic stability, I mean, I wouldn't say they're relatively worse off because they're all connected to the free floating dollar mechanism, right? So economically, they're gonna be as unstable as middle income, high-end income countries, just because of the currency being tied to the free floating dollar. And in terms of the debt burden, I mean, yeah, look, these frontier markets, their governments have taken on huge debt, right? They can't finance it. The two options, one is either they print more money or they take loans from IMF. So, and they're getting loans. Pakistan is getting loans from IMF, so is Bangladesh. So there is some level of economic stability in frontier markets right now. So that's why I think frontier stock markets will be the big rally in the next few years, next 2 years at least. It's because of a mixture of cheap multiple, cheap P ratio, and it's a combination of relative stability compared to the emerging economies and a recovery phase. Okay, a lot of frontier markets went through a huge down phase because of government change, all the civil wars, infighting. But now we are going through a recovery phase, whether it's in Sri Lanka, Pakistan, and now in Bangladesh. You can see there's a huge recovery phase starting, and that rally has been reflected in the Dhaka Stock Exchange. So that's why I think frontier stock markets will rally significantly in the next 2 years, especially those that are at the start of the recovery phase, like Bangladesh, like Nepal. Nepal, not so much because it's a very small country, so there's not much investment there. But Bangladesh is well connected to the world. I mean, they have solid partners in USA, in Europe, and UK. And the only problem Bangladesh has is India right now. And that problem is not going to go away anytime soon. So, but yeah, they've been able to keep India at a distance, bring in USA, bring in China, and let the big superpowers fight among themselves inside the country. So it's not a big deal, but I think yeah, frontier stock markets that are at the start of the recovery phase, that are at historically cheap multiples, and that are witnessing relative stability compared to emerging economies, compared to their frontier markets historical past. I think these are good places to park your money in the next 2 years. So I'll just add one caveat to this video, and that is you have to understand how foreign investment in stock market works, okay? So let's say I'm an investor in from USA. Okay, I'm gonna convert my, let's say I'm gonna invest in the Dhaka Stock Exchange. So I'm gonna convert my dollar into Dhaka and then buy shares in DSE. So what do I do? Well, if I'm predicting, or if the markets analysts are predicting that the Dhaka will depreciate against the dollar in the next 2 years, then I have to take that into account, right? Because whatever return I'm getting from Dhaka Stock Exchange, I have to subtract the depreciation of the Dhaka against the dollar. Because I will have to, whenever I make money in Bangladesh stock market, and I want to then take that money out of Bangladesh back into my account in USA, I have to convert the Taka into dollar. So if the Taka depreciates against the dollar, then that will cut into my profits. So if I'm an investor from USA and I predict the Taka will depreciate against the dollar, then I will not invest in DSE if I don't see significant return, if that makes sense, right? So I think what you guys should target is, like I said, frontier markets that are witnessing relative to emerging economies and relative to the frontier markets historical past. And you should also focus on frontier markets that have a good financing mechanism, right? And by good financing, I means they have a good relation with the big dollar lenders, IMF, World Bank, ADB, you name it. Because if you can get these loans at cheap rates from this big bank, these big dollar loans, that will help to stabilize the taka against the dollar. And that will help to give investor confidence that no, even after I make money from the Taka Stock Exchange and I convert that winning into dollar from Taka, I will still have significant return because the Taka will not be depreciating significantly against the dollar. And I think that's a good base case scenario for Bangladesh in the next 2 years. So yeah, I think you should focus on that. And because Bangladesh will be getting a lot of low risk, low interest loans from the big banks in the next 2 years, right? So again, I've talked about a lot in this video, and I'm sorry I've been out of making videos on YouTube for a while. I've been busy with my own life, but yeah, I hope you guys learned something from this, and I'll come back and I'll talk about how to trade on Dhaka Stock Exchange, how the frontier markets are different from other economies. Okay, one point I forgot to add. Frontier markets have significantly more gamblers than emerging and developed stock markets. I mean, that's kind of obvious, but a lot of foreigners don't understand it, or they don't understand, or um, they don't expect, or they're surprised by by the amount of gamblers, the number of gamblers in the frontier stock markets. Okay, and the reasoning is actually quite simple. It's because liquidity. Developed economies, emerging stock markets, there's significantly more liquidity. So it's hard for gamblers to come in and make money, right? You have to be very big gamblers if you want to gamble and make money in Wall Street or in Bay Street in Canada or in the UK, right? But where there's low liquidity, like in frontier markets, it's easier for gamblers to come in and make money because you are a bigger share of the market's trade. So that's one thing people should be aware of, that there's way more gamblers in frontier markets. And frontier markets do not trade based on fundamentals or news. They trade based on gambling. So here you have to apply a lot of probability-based modeling to see which tickers gamblers select the most to gamble on. And there are multiple factors that you can take into identify these stock tickers. I'll come back and explain that in another video. Until then, a peace. And if you guys like it, please subscribe. So yeah, that's it for now. Goodbye.